What's good, everybody? It's Z from The Mask, and I want to make a video today about a mistake that I still make almost 4.5 years into my trading journey. That mistake is not letting winners ride all the way. I'm going to use a trade here that you would have seen me take live if you were in the free Discord, which you can join in the description down below. This is a trade that you would have seen me take live, but I'm going to be using this trade from a couple days ago. It is currently Thursday, so this was 2 days ago. I didn't trade yesterday, but on Tuesday, I made the mistake of not letting my winners run. In this instance here, I didn't have much market structure over here, as you can see, to target. So I just went with my default 1 to 2. And because of that, I missed out on all of this, which was a really, really large move in total. I could have caught over 250 points instead of just 50 points. I missed out on an extra 200 points because I did not let my winners run correctly. Now, let's talk about why I took this trade, why I didn't let my winner run, and what I could have, should have, would have done differently if I had another chance to do so. Now, what you can see here is clearly a fairly bearish market, right? We have a high here, we have some lows here, we have another major high here, but this high here is lower than this one, which is lower than this one. Overall, we're going down, right? Keep making lower highs, lower lows, lower highs, lower lows, lower highs. Then we had a big crash to the downside. And what you'll notice here is that we kind of consolidated. We didn't really break a downwards trend very much up until here. And in this major break, we also created a nice fair value gap. Now, this is already in the New York session. Because it's already in the New York session, this likely has a decent amount of weight to it. Because of that, when it revisited it and then continued a downtrend, I let that be my entry because, again, what it was doing here, if I show you real quick, we had our move down, right? Let me change the color of that really quickly. That is not a good color to be able to see. I'll make it blue and I'll make it nice and thick so it's easy for you to see. We had our move right here. We went down, created a high, an equal low, higher high. Then, if you want to get real technical with it, we actually had a move up here, a low here, a high here, and then this here actually broke that previous level. And this right here is what I was paying attention to. So once this level was broken, which it was with this fair value gap right here, as you can see, again, we have a higher high, roughly an equal low, higher high, higher low, higher high. Then we have a lower low, a lower high, and an even lower low. Now, the push that gave me the even lower low created another fair value gap, which on NAS on the 1 minute time frame is my entry signal. So not only did we confirm the downtrend by breaking consolidation over here to the downside, we retested the consolidation plus a fair value gap around it, continued the downtrend. So the continuation of the downtrend is where I found my entry. So once the market right here ended up coming back into the fair value gap, I entered my short trade. And I have a minimum stop loss of 25 points. Now, because I have a minimum stop loss of 25 points, in this instance, it was technically slightly above the swing high. Usually my stop loss would be here, but 11.56 points is not 25 points, so I made it 25 points instead. And then because, again, there's no real structure for me to target anywhere here, there's nothing for me to really look forward to for the market to target, right? There's nothing for me to really expect the market to go to. Could have zoomed way out and gone all the way over here, but that's a long time ago, right? And on the 1 minute time frame, I didn't really trust the market to actually go all the way there. So I just went for a default 1 to 2 on this trade. However, if you notice, if you actually pay attention to how the market looks afterwards, we have right here where we broke the broke the lows here to shift into a downtrend. We then had a high, again an equal low, but a lower high, then a lower low, lower high, lower low, lower high, lower low, lower high, lower low. As you can see, we've clearly established a lot of places here where I could have trailed my stop loss. Now, if you've watched the trailing stop loss video, you'll know that each time price breaks one of these levels, one of these lows if you're in a downtrend, and one of the highs if you're in an uptrend, once price closes past it, you can trail your stop loss to catch much, much larger moves. So if I make an example out of this here, let's go ahead and take this. I'll make it red, signify that that's a stop loss, just like that. So the stop loss is right here, right? Now, the market is doing this right here. It goes up and down. And then here, we start to really break the low. So at this point, I can trail my stop loss either to break even or maybe above here to minimize the loss. But let's say I put it to break even now. It's right above that little swing high and low. Let me just delete that so it doesn't keep spamming the notification thing. And then what do you see again? We have now got a lower low. Now we made a higher low. And once this candle right here closed below the previous low, I could have trailed my stop loss to above that wick because it's now a valid high. It's a valid resistance point. Then the market continued to crash down. We had a bit of an upwards move here, but nah. Then this one here created a fairly nice lower low and a lower high. So once this big candle here closed below these lows right here, I could have trailed my stop loss to down here, right above the wick again. Now again, we have a lower low right here, a lower high, and then this candle over here closes past the wick here. These wicks here don't really count. They don't count yet because they don't close past the low of this here. But this candle here does. So once this candle here closes, I can trail my stop loss over to here. And then we have again got lows, lows. Now we have a lower high again, but it never ends up getting broken. So here is basically where we stop trailing our stop loss. Technically, you could trail it again once this candle here closes below this low here. So you end up here. But for the sake of the argument, we're going to pretend that this is where we ended up trailing instead. Now, eventually, the market came back up to hit it somewhere over here. So you would have gotten stopped out with this amount of profit. But instead of getting 50 points, you would have ended up getting stopped out at almost 150 points. Triple what your normal take profit would have been in this instance. Because again, there was no market structure immediately nearby for me to target. So I went for a default 1 to 2. If instead I had trailed it according to market structure by trailing past highs and lows, depending on the market direction, I would have tripled my trade size in this instance. And instead of having a 1 to 2, I would have had almost a 1 to 6. Now, like I said, this is a mistake that I still make when sometimes I'm just kind of done mentally, or I'm just bored with the market for the day, or there's other things on my mind, or whatever reason it might be when I'm not really in the zone and I just want to get out of the market and I'm not super focused. Stuff like this will happen, right? I'll just be like, okay, fine, give me a 1.5, give me a 1 to 2, whatever, so I can leave, right? And many of you might feel like that occasionally as well. But you have to realize that this can be an entire month's worth of profit. The part here that you're missing out could be an entire month's worth of profit. Because you're going to have months where you might only make 2 or 3%. So having those extra, instead of 2% that you gain on this, gaining 6% instead, or almost 6%, that could make the difference between you ending the month either in loss or at break even versus ending it in a slight profit, right? And just being able to mentally, I guess, put yourself in the right state of mind, I guess, to just focus on making the correct decision. It's like I said, I still do this 4 years later. Sometimes when I'm just done, I want to get out of the market, I still do stuff like this because I'm just lazy sometimes, right? I don't always want to make perfect decisions that take a lot of mental energy. I just want to have the easy trade and go. And that's something that I still need to work on. And it's something that maybe you can work on a lot earlier than I started working on it. And maybe you'll do better than I will. So at the end of the day, that's kind of what a teacher, wants for his students. Kind of do better than he did, to know more than he does. Kind of what I'm hoping to do with the channel anyway. Get a couple more people either to the same level or even a better level that I'm at. But yeah, that's about it for this video, and I'll see you in the next one.